Tonight I'm going to be talking about order management and specifically, our trading when markets move against us. And as we all know, this can happen quite regularly. That's what markets do to us. And before we start, I'm going to just give you a quick quote from Warren Buffett. He's 92 years of age. He's been successfully managing billions of dollars in the financial arena. And he came out of a comment to say, we don't have to be smarter than the rest. We have to be more disciplined than the rest. And whilst we can talk about psychology and many factors that can involve how we respond and react when we lose money, the overriding message there from him is that we need to find a process, trust our process, and be very disciplined around that process. And effectively what that's going to do is minimize our losses as much as we can so that we can enjoy the fruits of the successful trades and learn to write those better so that we only incur relatively small losses and we can actually glean some pretty substantial profits when we actually decide to run them. So psychologically, what causes us problems when our trades tend to go out of the money? Because we end up making poor decisions, and the key factors behind that are unfortunately fear and greed, and you'll read that everywhere in every trading book. And these really do drive some of our poor decision making. And if we just look here, it's just a graph, a chart really. And if we're in that situation, where we've been waiting and waiting, we feel the market may go down and we want to sell a dip here. We finally get that short on board. And if we actually sell that without any protection, we put no stop loss, and the market tends to bounce, we could lose all of that in one go. It can get wiped out. And actually, if we have disciplined stop losses and their stop losses are affordable to us and in the right places, as in previous market price action and the things that you'll hear from Richard from a chart perspective, we can actually see that we can place stop losses in the correct place. And it will avoid all the turmoil as to when we start losing money or the market takes our position out of the money. Because what happens is if we haven't thought about this and we haven't got everything in the right place, we start to get anxious for the wrong reasons. Instead of sitting comfortably knowing that if the market goes too far away from us, our idea is wrong, we're disciplined and we're out, then basically it's at that point we start thinking about, where should I cut this position? Generally, when this situation occurs, the market is beginning to accelerate away from us. We get even more frustrated as it moves higher because we haven't actually actioned anything yet. And by the time we finally cut this position, it's because we've got completely angry with ourselves, totally frustrated, and we chop it out for no real reason apart from that frustration. And we're probably chopping that position in no man's land relative to previous data points. And that's just not where we want to be. So we can see there the emotions that come attached to that type of trading and, how we can actually be a bit more disciplined about our stop lossing to stop ourselves getting into that position in the first place. And if we even look at it from a perspective of taking profits and being a bit more aware of our markets, we haven't been stop lossing ourselves out because of fear of maybe hitting the top and the market then moves back in our favor and we've already taken a loss. The actual fear of putting a stop loss in, some people just won't do it. And to us, that's pretty criminal. But, even in this situation where you may sell close to the top here, the greed comes into it sometimes where maybe we're reading the tea leaves and, we get to a point where traditionally we may have been taking some profit, but we get greedy. We may have already established that as a purchase level, but we get greedy. And what happens? The market, as it often does, goes back in our face and we start not losing money per se, but we're losing the intrinsic value that we had in that position. And from then on, our emotions start blowing out and we start making poor decisions. So maybe that's a couple of situations that resonate with you. And what we need to do is try and stop ourselves getting into that situation. The key thing there, obviously, aside from Warren Buffett's discipline, and that's discipline around stop losses, discipline around targets, it's changing the mindset. It's basically understanding that we will make losses and accepting that fact. And what we need to do is learn to ride them. The easiest way to do that is to be disciplined around our approach around stop losses. We don't want to put them too close to stifle our trading. We need to let our trades breathe a little bit. So we put them at a level where we feel we've got sufficient protection, and we put them at a level where we know we can afford them. And from then on, you can start enjoying the fruits of when the market goes in your favor, and you can start enjoying the delights of taking profit and the many ways that you can do that. It's not a one-dimensional thing. You don't need to buy and then sell. There's many ways you can get in and out of positions. But once you've got your stop loss discipline in there, that opens up all of those possibilities to enjoy your trading. But you also have to accept that you will make losses. But there is such a thing as a good loss. And I think that's what we're talking about here, is to help protect yourself, preserve your capital without suffocating your trading, have good discipline around your stop loss. And so those losses become good losses. They become relatively cheap losses that help you move on to the next trade that will hopefully be successful. And remember, sometimes markets, we can just be unlucky. We can be unlucky with our timing. Our ideas may be great, but our timing may just be wrong. So we need to learn to take these losses, get out of the bad ones as quickly as we can work out, and ride those good ones. So we've gone through the process of now thinking that these stop losses, let's rename them. Maybe they're our insurance policy, they're our protection. But again, the beauty is, if you know they're in the right place, they're your backup. Our ideas will go wrong from time to time. The market will come back in our face. We accept that. But what this does do, it should remove the anxiety around holding that position. Because if you know and you've accepted that you may lose that money, you're disciplined and you don't move that away, because unfortunately that's what some people do. As soon as markets move towards their stop loss, again, they get fearful of that stop loss being hit. They move it further away, and then it gets hit further away. Their loss is bigger. Please don't do that unless there's a real reason for you to do that, because that, again, will increase the anxiety, and we're actually going against our whole planning of that trade. So get your trade plan in there. It removes the anxiety, and it gives you the freedom of thought for planning the out trade, and hopefully with a positive return. So most of that box there is all about accepting what's going on. Don't listen to everyone around you. Stick to your plan. Every day we should be looking at that plan, looking at that formula that we have around our trading. We can nibble away at the edges to improve it, learn out from our mistakes. But, it's your plan and it's your edge. It's your way of making money in the market. The key thing as well about this discipline around stop losses is that we earn the right to trade another day. We are not going to lose all of our capital by poor risk management. We can come back tomorrow with a bright idea, a fresh idea, and hopefully that's the one that really boosts our capital account and gives us the confidence to go on and trade even better from there on. As ever, we always look at evaluating our trades. If you're a fairly high frequency trader, then maybe you wait for the end of a trading session to do this. Don't overanalyze, but try and pick up on the good things. Try and work out what maybe you did wrong. Maybe you could have been stop lossing yourself out a bit further away. Maybe you're doing it a bit too close and stifling yourself. But learn from those mistakes and move on. Don't make it a post-mortem. Don't make it time-consuming, but learn from it every day. Now, I just want to touch on the fact that sometimes we do have situations where we get either a heavy loss. Maybe you did set your protection quite a way away because you really wanted this one to evolve and ride out. Actually, even though you were fairly disciplined in your management, it still came with a heavy loss. You might have accepted that, but it's still difficult to take. And let's say we have a series of losses, a series of trades that all go wrong. As I said, it could be bad luck, it could be a poor timing, or maybe you're misreading the tea leaves in the market and you maybe haven't got quite right what the drivers of the market are. So what do we need to do? Well, we need to step back a bit. We need to decompress. We need to literally take the pressure out of the system. Maybe we do a little bit of that analysis and evaluation, but again, your mindset is not going to be right at this moment in time. So I would even park that and I would just go away from the market a little bit. And I'm not talking about necessarily for 2 weeks, although if that is what you need, then feel free to do it. But it's a period of time where you can take pressure out of the system, go away, look at your hobbies, look at your family, anything that will take your mind off what's been going on. And then, unfortunately, it's the same as what goes on in the rest of our lives. If we want to pursue this, we have to get back on that bicycle. We have to reset everything that's gone on and, use that time to then readdress maybe what went on, have a look at that evaluation. Maybe you can tweak your process. Maybe it was the discipline that went out the window. And if that is the case, that's something you need to address, number one. Because as we mentioned right at the very start, if you're very disciplined about that whole process, and particularly the loss-making side of it, then you're going to live to fight another day. Then hopefully you're going to come out the back end of this making money on a much, much more consistent basis. If you are still struggling, please don't be afraid to reach out. Listen to as many of this type of webinar as you can. Maybe talk to some peers because it may be a timing issue. Do some read and research. I would suggest when you come back into the market after this type of series of losses or whatever, you start reducing your risk as well. Tread carefully when you go back in. Dip that toe in the water, get your confidence back. And hopefully you'll be on that bike pedaling as fast as you can and making money.